Good morning. It's Monday, the 11th of November. I'm going to go through the markets this week. My views, as you know, if you follow me, gold's my favorite market. We identified the fact that gold would probably go lower, bearish engulfing candle, followed by a second bearish engulfing candle at the all-time high, which took out the previous 2 days low. We had a doji candle on the Friday before on the daily chart, and we had one on the weekly chart. For me, that signaled that gold was going to lower. Now, my target was 26.75, 26.70, and we actually sailed through that and continued lower. I'm still not sure why we bounced at 26.43. The only thing I can see is the 50-day moving average. Anyway, we bounced off that, which was a bit of a surprise to me. I didn't see why that would hold. We still should have support at 26.75, 26.70, and that's being tested right now as I record this video. So the question is, will that level hold on the way down this time? For me, that's the crucial level of the day. Now, if we can't hold on to 26.75, 26.70, we'll retest the 50-day moving average, which is around 26.48, 26.46, according to the daily chart anyway. Now, the shorter-term charts are a bit of a mess because of that extreme volatility that we had over the election results last week. And there is not really any point in me showing you the shorter-term charts. They are a bit messy. For me, really, I'm going to have to sit back and wait for a pattern to form, get a clear signal, get a clear trend, which at this stage does look like we are developing a bear trend, but it's very early days. So at the moment, I'm sitting on my hands and waiting for the next signal. Now, on my spreadsheet of trade ideas, which I do for my subscribers every morning, look, on the right side of my spreadsheet of trade ideas, I put a short-term trend. And in this case, you can see that every single market that I'm looking at is trading in this sideways channel. It makes it really difficult for me. I'm a trend follower. I need a bull trend. I need a bear trend, which is why gold has been so good to me lately. It's been a bull trend. But at the moment, Forex markets are trading in sideways channels. That's dollar pairs and yen pairs. Gold is now a bit confusing, as I've said. Silver's been trading sideways for a long time. Oil has been trading sideways for a long time. Stock markets are in bull trends, so they're more easy to follow. They keep going up, but definitely Forex markets are quite tricky at the moment. Silver is finding some support around my fib levels, and we've also got an upward sloping trend line from August coupled with the 100-day moving average. So around 30.80, 30.13 looks like a good support level for silver, and that's the level that's going to be key for me this week. I talked about so many markets moving in sideways channels. Oil is definitely one of them. Look at where we are. We're actually trading exactly where we were almost a year ago, around November and December of 2023. We're still also trading around where we were at the end of August, beginning of September. So we really have gone nowhere for the last 2 months. I'm finding it difficult. There's no clear trend, no clear pattern here. Even the trend lines have not really been respected in oil. So at the moment, I'm struggling. If you've got any ideas on how to trade oil at the moment, please let me know. Talking of sideways markets, again, New Zealand dollar versus Japanese yen has been going sideways since the beginning of October. I've got an upper trend line joining the peaks. I've got a lower trend line here joining the lows for October, which also coincide with the 200-day moving average on the upside and the 50-day moving average on the downside. So if you like to trade a channel, if you like to trade a sideways market, the New Zealand dollar versus Japanese yen is absolutely perfect for you. I'll also be watching for a breakout, and I'll be trying to jump on a trend if that happens. There is something of a trend in the Canadian dollar versus Japanese yen. You can see since the beginning of October, there was this gentle upward sloping channel. So if you do trade the parameters, we do seem to have good support down here at around 109.50 from the 500-hour moving average and the trend line going back to around mid-October. We've just bounced off there and we're trying to push above the 100-hour moving average. If we can do that, we can retest last week's high around 111.17. But unfortunately, with dollar pairs, there are just too many that are doing this kind of thing, as we see in the Aussie versus the yen, quite erratic, random, quite narrow ranges. You can see on the hourly chart how the moving averages have been flatlining since the beginning of October, which just reinforces the fact that the Aussie yen isn't actually going in any particular direction. Pound yen, yes, you could argue that the pound has been increasing in value against the yen, although certainly over the last 2 weeks, we have been going sideways. Buying at a support level would seem to be the right thing to do because we are in a gentle upward trend. And I noticed that the pound versus the yen has just bounced off the 500-hour moving average. Maybe you want to have that on your chart as a guide, because here you can see from the green line, the 500-hour moving average is working really well as a support level. We've touched it twice in the last 2 weeks, and the low around the beginning of October was also just above the 500-hour moving average for the pound versus the yen. If you are trading cable, we have been in a short-term bear trend, as you can see from the hourly chart. We've dropped from 134.34. Guess what? Sideways movement. Not really respecting the Fibonacci levels on the hourly chart. We do have some resistance around 129.80 from the 500-hour moving average in the 23.6% fib. We'll see if that holds, but quite erratic, quite volatile, and no clear direction. However, if you're a subscriber, you will know that we have a downward sloping 13-year trend line that we broke above in October. We've dipped to retest that 13-year trend line. So this is absolutely crucial. This could be the start of a really strong bull trend if we hold that support level this week in cable. This is the daily chart for the US dollar versus the Canadian dollar. We are testing a well-tried trend line going back to, let me see, March of 23. So we're testing the upper limits of this range. The trend line has held so well so many times. We're about to retest it again. That level's around 139.40. If we do hold it and the market turns lower, we could be heading down to around 137.00 as the first target. So that could be at least a 200 pip drop. But we're obviously at quite a crucial level, because not only are we at the upper end of the recent range going back about 18 months, we're also closing in on the high from 2020 at 139.77. So big resistance area there. And that means if we break above it, that could be a nice buy signal, because ultimately we have been in a bull trend since mid-2021. It's just that we've had a huge sideways consolidation for the last 2 years. Difficult to trade that, and I'm desperate for a breakout. I really do hope we get it and finally have a trend to follow. As I said, dollar and yen are most of the sideways trending markets. This is the euro versus the US dollar. You can see that since the beginning of 2023, almost 2 years ago, we have been trapped in this horrible sideways pattern. I thought we had a break to the downside, which was tradable last week. Then we got whipped as the market suddenly turned around and reversed and jumped back up through that trend line. Now we're back below it, but I don't have the guts to trade it yet. It's just too choppy, too whippy. I don't want to get caught out again on this one. I'm going to wait. If you're feeling lucky, then you might decide to sell the euro versus the US dollar on this break below that trend line, which goes back to September 23. So it's quite a long-term trend line. It could be quite significant. I'm just a bit fed up with having myself whipped back and forth over Thursday and Friday of last week. So I'm going to be a little bit more cautious at the start of this week. It is worth looking at the weekly chart for the euro versus the US dollar, because there is a longer term downward sloping trend line. One of them dates back to 2009. So that is a 15-year trend line that would be very important if we were to break above it. And that 15-year trend line coincides, certainly will do if we were to recover, with the 500-week moving average. So that's all around 112.00. Okay, we are 500 pips away from that. But I just want to make you aware that if we did have a recovery, that is the most important level that I can identify for the euro versus the US dollar, which brings me on nicely to the dollar index, because that's usually close to a mirror image of the euro versus the US dollar, because the euro is the most heavily weighted currency in that index. Now then, this chart goes all the way back to 2017. This is a weekly chart, but it does give you a good perspective. You can see that since the beginning of 2023, we have been stuck in this sideways channel, nearly 2 years. Very frustrating, not easy to deal with. We are testing the upper limits of the range using this trend line going back to mid-2023. So it's at a crucial point, and it coincides nicely with a 38.2% fib, which is around 105.38 in the dollar index. So yes, we are at a crucial point. I will expect that resistance to hold, but I will certainly be looking to be a buyer on a break above that resistance, and hopefully we will then have a tradable trend, which is something I am so desperate for and haven't seen for a couple of years. One thing I'm pretty good at is jumping on these trends quite early. Now, sometimes that costs me money, of course, because I try to get in early and we have a losing trade, but losing 30 pips or so in the attempt to try to catch maybe 3, 4, 5, 6, 700 pips is definitely worth it for me. I don't mind losing 2 or 3 trades if I can eventually catch that trend, sit back and let it run. Just out of interest, this is the weekly chart for the dollar Swiss, and you can see the dollar has been pushing higher against the Swiss as well. We've broken above a relatively short-term trend line going back to May of this year. So at the moment, it's quite bullish, but we have run into the 23.6% fib around 87.60. We're just hovering around there. And you can see we've got the 50-week moving average as well. So there's a bit of resistance. I'm sitting back to see whether the fact that we've broken above the trend line pushes the dollar Swiss higher, or whether this resistance area pushes the market lower. Up to you if you want to take a gamble on whether to short at the resistance or wait for a break above it and jump into a long position. From the daily chart, it does show you a break above that trend line, and it does show that we retested it on Friday and managed a strong bounce off there. So if that's anything to go by at the moment, the outlook is a little bit more positive. But that, of course, depends on what reaction we get in the dollar index at that resistance level. If the dollar index cannot break through that resistance that I showed you a minute ago, then the dollar Swiss is likely to reverse quite quickly. Aussie dollar, guess what? Very big sideways channel. Impossible to trade right now. Even the moving averages on the daily chart are all flatlined and are converging, which is typical of a sideways trending market. And if we go to the weekly chart, however, there is some opportunity with a longer term trend line. I thought we'd broken above it. We failed. We came back below it. But this is definitely something I'm watching for the Aussie dollar. The trend line goes all the way back to 2011. There are some very important longer term trend lines on these dollar pairs. And that's something I'm watching at the moment. But right now, I'm paralyzed. I don't know what to do with the Aussie dollar. It's just not moving. I'm starting to look at some Swiss pairs. The Swiss franc doesn't move that much, but I'm desperate to try and find something to do. And you can see at least that the euro versus the Swiss has been in something of a bear trend since the beginning of 2021. So I would suggest that I should have a negative bias on this. When you zoom into the daily chart, you can see we're actually in a triangle pattern. So this could be something that's worth watching if we break above the upper trend line of that triangle. It only goes back to August 24. It's not a big pattern, but still something worth looking at because the trend line is held really well, and therefore a break above there could be an opportunity to jump into a long position. Otherwise, we've got the lower trend line for the euro yen around 93.20. So that's going to be something to watch on the downside, trade the range and wait for the breakout. Okay, I hope that's been helpful. I want to hear your views on these markets, and I want to know if you've got any other ideas for me in other markets that I'm not looking at. And also, if you want me to have a look at a market that you're trading and I've not covered today, let me know and I'll try and do that later in the week. I hope you've enjoyed this video. I hope it's helped you. Please do like, share and subscribe, and go and have a look at my website if you're interested in receiving daily signals and analysis from me in my private Telegram channel.